Friday morning, this was the assessment I had made on euro dollar. As you can see, I was predicting price to come down to these stops eventually during the news, especially during PPI, and find support. And you'd think after all this analysis, I'd made bucks and, got my entries and hit my targets. But things didn't pan out as I wanted to, even though price did exactly what I had anticipated, which is exactly come down to this low, find support, push up. But yeah, let's just analyze all the trades I've taken during PPI or post PPI and try to not repeat the same mistakes in the future. I'm just going to post a video of pre-trade analysis that I did in the morning before all of this, and then I'll do a post trade analysis. So I thought this candle that broke above this range's high was going to be the liquidity candle that grabbed all the buyers, and then however we got another close above. And to me, still, if we hadn't tested this high below that daily time for fair value gap, I was still happy for price to drop down to this low, find some support, and then push higher. And I was still waiting for that play to play out, especially we had PPI at 1:30 UK time, 8:30 US time, so another 4.5 hours. I waited patiently, right? Candle printed, nothing, did nothing, again did nothing, and again did nothing. And this is the annoying part, because we came down to this support before the news. I was hoping that we would consolidate around and then drop during the news, which would have given me a lot more confidence to trade this higher. And also the fact that because of this breaker, I was watching that breaker as well, that weekly order block right there as well, just in line with that breaker. But we also had this fair value gap that price clearly was coming down to, right? And this is what happened before the news. We just go from the 5-minute, right? This is a classic play. We came down to cover liquidity, and then we started to displace up, like leaving. We had these bearish fair value gaps. These again disrespected. We inverted this, held, then we close up again, and this a pullback anywhere around here would have been a good entry, but because news was coming out at 1:30 in around 20 minutes, it's not something I want to be trading. And then news came out, boom, this happened. And after seeing that, to me, yep, I was like, price is definitely going to take out these highs. And I entered too aggressively, somewhere around here, because that was the 50% off this swing. Just above that New York Open, we had this consolidation, and then this candle that took our liquidity above and below the range. After seeing this though, honestly, too much going on, way too much going on with the news coming out. Everything was too rapid, and I wanted to get into the trade. This is exactly the same as what happened yesterday during CPI. So 2 days in a row, the same mistake, and unacceptable, and a big lesson. And I've gone through all the CPI and PPI news for 2024, and I've started to notice a pattern after the news release, especially when there's a direction. I don't need to be in a rush to enter. I shouldn't get into a trade in a rush. I need to give myself some time. I need to see some further confirmation before I want to look for a trade. Because that way, either I will miss some trades or I'll be protected from a lot of losses. And yeah, entered this right there at the 50%, had my stops quite low, and I was happy to just take a less than a 1 hour on this trade. Starting to pull back in my direction, and after I saw that, I exited the trade somewhere around here. I was not happy, being in this trade. And then I saw, price to cut this liquidity, and I say this over and over again. If you take a subpar trade, then you've either need the balls to enter a trade that is good quality, or just energy's just sapped by this point. And honestly, thought process is not the same. Yeah, everything it's just different. Then this is another trade. I was watching this thinking, yep, that looks like a good trade, because We got the microstructure shift. Honestly, this is such a good trade. We took out the low microstructure shift, and even targeting these highs would have been perfect. However, of course, I didn't take that trade. And we continue. We reject this New York Open. Yeah, we come into the New York Open on the 15-minute as well. We've got this bearish fair value gap that is looking to get inverted, right? On the 5-minute, yep, we see this pattern, and then price taps that New York Open, and seeing this candle again. Amount of times when price is going higher and it keeps printing candles that just keep on giving false information, right? Like, you look at this candle and think, all right, we're going to go bearish now. It's high wick liquidity, taking liquidity out, closed below, looks like it's going to go lower, and it's just such a false representation of what market wants to do. And then it comes back down. As it came down again, this tapped into the low of that inverse fair value gap, and for me, I entered a trade right there on one of my accounts, but then exited the trade. And then as price was closing above here, I entered another trade with my stops somewhere around here, and my targets at these highs. By highs, I mean we've got entry targets right there, right at that liquidity level, but also this close and open right there is my target. I didn't want to aim for the highs. I did initially, however, given that there's liquidity resting here and there will be liquidity resting around here, I'm happy to exit that trade there on Friday at, this is London close at 10 a.m. This is 3 p.m. UK time. This is way too late on a Friday. So for me, then I entered the trade there, and that continued higher. Another potential entry on this pullback. Now, it doesn't pull back into the 618, but you get a pullback into the 50%. And yep, I had another entry placed on my other account at the New York Open right there after price closed above it, because had it retraced to the New York Open, I would have been triggered in my other entry, but price doesn't come back into New York Open, and then we continue higher. And then, yep, had I placed my targets up at these highs, I would have been, it would have been in a bit of a trouble because price starts to pull back. So yeah, always these highs would have been more than enough to take some targets off, especially because I took essentially a 1% loss because I was quite aggressive here in this trade when the news was released right there, somewhere around there. And yeah, I took my targets or took a stop at like 0.5, which was essentially a 1R because my risk was high here, and then my risk here was just 1%, and overall I believe, yeah, I got like 0.3% out of this move. Not bad, but given that there was potential to earn a lot more, I feel the need to go back and review all these news releases during this time and look for the way price sets up when it's heading towards a direction, especially when I'm a lot clearer on the direction, because I was clear on the direction here. I knew, I wouldn't say new, but like I was confident that price was going to come up, take these highs. I was even more confident that we might tap into that daily time fair value gap, which didn't. It's fine, but I was more clear on the direction that it was going to go higher. And as it came up, yeah, there was moves along the way, there was plays along the way that I could have potentially placed myself into. And it's a lesson learned. I've gone back on the news releases and I've seen the things that I should be doing rather than just being so aggressive, especially during PPI and CPI. And also, this was on a Friday, so this is a TGIF trade essentially for me, because we had essentially a bearish week, right? You had Monday, Tuesday made the high, Wednesday, Thursday was bearish candles, and then going into Friday, Thursday was already the day where we started to see bullish displacement. And yeah, for me that was enough to suggest that we might continue higher. But we still, momentum is still bearish for me, right? We've had 2 bearish closes in a weeks in a row, and going into next week, I would predict price to come out, take out this sell side liquidity ideally. So let's see. Same thing on pound dollar. I had identified my drawn liquidity around up here or up here, which is a CPI candle. We're still in a bearish trend, so obviously when I say the drawn liquidity is up there, I wasn't going to aim for my targets up that high. However, right, we had a pullback, came into New York open before PPI release. Again, annoying because ideally I wanted to see the news bring price down to that low to look for entries. And then we had this news candle, right? This is essentially, we had a market structure shift, price pushed up, and could have easily entered on the 618 pullback. Doesn't tap into that New York open. This is just a 618 entry, pullback entry, and then price pushes up. And one of my other accounts, I entered somewhere. Where did I enter? I think I entered somewhere around here. And on similar to euro dollar, again, not enough confidence in this trade, and I exited the trade straight away, somewhere around, I believe around here, at like 0.3% profit. So overall, the 2 trades made me like 0.6 during PPI, but it was one of the most stressful trades that I've have had to go through, mainly because I don't know what I was doing. Didn't know what I was doing. That's just a baseline reason for it. And again, so many opportunities here, man. It's annoying that this is exactly what happened during CPI yesterday, and I told myself accumulation, expansion, whatever, close above, market structure shift, and then pull back. Pound dollar more likely to pull that. It seems like it prefers pulling back to 50%. And then you can have the stops there, targets there, 1.8 to 1, perfect. It's just such a good trade. But all of my energy has just been sapped on trying to get in and out of low quality, subpar trades, that when I see things like this, which is exactly what you want to see, market structure shift, it just doesn't register in my mind to enter. Even though I'm watching this live, and my energy's just been sapped. So that's just a big psychological impact of taking subpar trades, is that when the good quality trades present themselves and you're in a trade, it's difficult. So PPI, CPI, I'm better off just waiting for some kind of a structure shift and then pull back into a 50% off the swing, and then aim for 1 to 1, 1 to 5, 1, whatever. Aim for the highs off the news. So there's that. Those are the trades that I took on Friday for euro and pound dollar. PPI, post PPI trade, everything was good. Just needed more confirmation before entering trades, which is fine. I'm good with it. I'm glad I went through all that stress, just because now I feel a lot more confident, because it forced me to go back and review pound dollar, review the pairs and how market reacted during those news periods, and how price reached those highs and lows that it was supposed to after the release of news, and it showed me that waiting and entering with some structure shift is a lot better way to get into the market than just entering aggressively. So cool, good analysis.